Okay, so today we're diving deep into something you gave us, the 2023 annual report for Li Ning,
Hmm.
a pretty well-known sports brand, and uh, you want us to really unpack it. Like, how are they actually doing? What are
Yeah.
their strategies? How are they thinking about the future? So I guess our mission today is to dig into this report, pull out those key insights, especially about their different business areas,
Right.
their financials,
Right.
and how they plan to grow shareholder value.
Yeah, exactly.
Really give you that clear picture of where they are now and where they might be headed.
Exactly. And we'll be focusing on that Li Ning Annual Report 2023 PDF that you sent over.
Perfect.
Really kind of taking apart their different business segments and seeing how each one is doing,
Right.
what kind of trends they're observing, what their strategies and initiatives are, and what challenges they might be facing.
Yeah.
Then we can get into the real nitty-gritty of the financials, looking at what's really driving their performance.
Yeah.
And key metrics from, their income statement, balance sheet, cash flow statements. And then finally look at their plans for things like dividends and share buybacks.
Okay.
And then try to give an overall assessment of, the business moving forward.
Sounds good. Let's dive in. So starting with their overall performance in 2023, I mean, they had a pretty steady revenue growth, right? Like 7%,
Yeah.
bringing them to 27,598 million RMB, up from 25,803 million in 2022.
Mm-hmm.
Gross profit also increased similarly about 6.9% to 13,352 million.
Right.
But I think what's interesting right away is that gross profit margin stayed consistent at 48.4%.
Yeah.
So even with, potential changes in like raw material costs and competition, they've managed to keep that margin stable, which I think points to some pretty strong brand loyalty
Yeah.
and pricing power
Yeah, definitely.
in their key segments.
That's a good sign.
Yeah, it seems like they have a solid base there to reinvest in growth
Mm-hmm.
without having to, sacrifice profitability.
Exactly. Yeah. And then if we look at their overall profitability, the net profit attributable to equity holders was 3,187 million RMB, which resulted in a net profit margin of 11.5%.
So clearly they're doing something, right? But let's talk about how they're looking to stay ahead. And it seems like a big part of that is innovation, right? Like they're putting a lot into R&D,
Oh, sure.
research and development.
Absolutely.
Your report highlights a couple interesting technologies like the ComFoam soft bounce technology.
Okay.
So they're making their footwear more comfortable.
Yeah, making it feel good.
Exactly. And then the Li Ning carbon core drive system, which combines something called full boom and an impact carbon plate to boost athletic performance.
Yeah, so really looking at the technology there.
Yeah, so they're not just, sitting back and relying on what they've already got.
Mhm.
They're actively developing new things.
No, they're innovating, for sure.
Now, their approach to different consumer segments is also pretty interesting. Like with their China LIN fashion line,
Right.
they're collaborating with artists with high-end fashion brands
Hmm.
and focusing on like more niche sports like skiing and skateboarding,
Yeah, it's interesting.
which makes me think they're trying to reach a younger crowd
Yeah, definitely.
who are maybe more into like fashion and trends than just purely sports.
It seems like a good way to kind of broaden their appeal.
Yeah, definitely.
Yeah.
And then their Li Ning Young segment is also evolving, right?
Right.
They've streamlined their products to focus on pro gear for core sports like basketball, running, football.
Yes.
But they're also pushing innovative design within that segment as well.
So they're kind of hitting both sides of the market there.
Right.
They have their foothold in those essential sports categories with Li Ning Young, and then they're using that China Li Ning line to kind of explore more fashion-forward trends, capture that new customer base, which really plays into their single-brand, multi-categories strategy,
Right.
where they can offer a whole range of products and cater to different needs and preferences, all under that Li Ning brand.
And it's not just what they're selling, it's also where they're selling it, right? Like they're really focused on expanding their presence in like core cities, those key business districts, those prime locations.
Absolutely.
And they even have something called the Li Ning Retail Operation Manual
Wow.
to really fine-tune how their products are managed and presented in stores. So it seems like they're putting a lot of effort into optimizing that physical shopping experience.
Yeah, I mean, that in-store experience is still so important, especially for apparel and footwear.
Yeah.
People want to see it, people want to touch it, people want to try it on.
Exactly.
So that focus on prime locations and having those standardized operations
Yeah.
really shows that they understand the value of a strong physical presence.
And they're also watching those emerging markets, right? Like lower tier cities in China,
Right.
and even internationally. So they're always looking for new growth opportunities.
Yeah, they're thinking ahead.
But of course, adapting to those different markets is key, right? Like what works in one place might not work in another.
Yeah, for sure they'll have to tailor their channels and products to really resonate with those different consumers.
Now, to reach those younger consumers we talked about earlier, they're also changing up their marketing game,
Oh, yeah.
investing in more professional resources, exploring those product crossovers, and even collaborating with the entertainment world.
Smart.
So really elevating that brand image
Mm-hmm.
and trying to connect with that next generation.
Yeah, it's all about staying relevant.
Exactly.
Yeah.
And speaking of staying relevant, when we look at the bigger picture of their performance, their channel performance really reflects these moves, right? Like
Yeah.
the whole Li Ning game platform saw a decent increase in sales, like low 20s%.
Not bad.
But what really pops out is that strong growth in their offline channels,
Okay.
which jumped by a high 20s%.
Wow, impressive.
Yeah. And within that, their directly operated retail stores had a huge increase, like low 50s%.
That's significant, right?
While their franchise stores also grew by a healthy high teens%. And e-commerce saw a more modest increase, like mid-single digits.
So they're definitely killing it with those physical stores.
Yeah, it shows how that focus on prime locations and enhancing those retail operations is really paying off.
Right.
Even their same-store sales for the core Li Ning brand, excluding Li Ning Young.
Okay.
For Q4 of 2023, saw a low teens increase overall with their own retail outlets, leading the charge with a high 30s% jump.
Yeah, those are some solid numbers.
Yeah, and it's interesting to see that kind of evolution in their online versus offline strategies, right? E-commerce is still growing, but those physical stores are clearly a major driver right now.
Yeah, for sure. And their single brand, multi-categories, diversified channels strategy really shows how they're thinking about managing all these different ways to reach their customers.
Yeah, very strategic. Now, the report also gets into specifics about like product innovation and their focus in different markets.
Okay, let's hear it.
Like their badminton shoes are seeing some cool advancements with new upper materials for better performance. And they're really pushing that Chinese style with their rich everyday and Chinese colors series.
Yeah, I've seen those.
Yeah, which blends those traditional aesthetics with modern design.
Very cool.
Yeah, and their soft series of sports casual footwear, which uses that Comfoam technology, has been a massive hit.
I can see why.
Like their Soft Go shoe sold over 150 million pairs.
Whoa, 150 million.
In a year.
That's a lot of shoes.
It's crazy, right?
Right.
Do the sources give any more detail about what made those shoes such a success?
It doesn't get into the nitty-gritty.
Okay.
But just looking at those numbers, I'd say they probably nailed it with the comfort, the Comfoam technology. And the price point probably made them accessible to a lot of people.
Yeah.
Plus that broad appeal in the sports casual market. So they seem to have hit a sweet spot there.
Yeah.
And it looks like they're building on that success with the development of Comfoam Plus and Comfoam Light formulas,
Okay.
aiming for even better elasticity and lighter weight.
So they're really pushing those boundaries.
Yeah, they're not settling.
And their focus on performance wear with those moisture-absorbing, quick-dry fabrics
Right.
shows that they're committed to athletic functionality in their professional lines, too. Even their basketball division is strategically using partnerships with athletes and events to boost their visibility and drive sales.
Yeah, it's all about those smart collaborations.
Definitely.
Yeah.
And it's not just about selling products, right? Like they're also fostering community engagement.
Oh, yeah. How so?
Like with their possible women's space community, which focuses on things like yoga and dance.
Cool.
It's more about creating a lifestyle and a sense of belonging around the brand.
Absolutely. Building that community.
Exactly.
Yeah.
Now, behind all of that, they're also working on improving their operational efficiency, enhancing store operations, digitalizing their logistics system.
Okay.
They're upgrading that single store model with clearer roles and responsibilities. So it seems like they're trying to streamline everything and make it more effective.
Yeah, making sure everyone's on the same page.
Right. And they're also prioritizing talent management, optimizing that organizational structure, cultivating young talent, refining their performance evaluations and incentives.
Smart moves.
Yeah, really building a culture that's focused on results.
Yeah. And a strong team is key for success.
Absolutely.
Yeah.
So when we look at their future strategies as they've outlined them in the report,
Okay.
what are the big takeaways for you?
Well, their main focus is still on China,
Okay.
which makes sense given how strong they are there. They're looking to optimize their product range and pricing, explore new sports scenarios, develop specific market segments, and integrate more fashion into their designs.
Okay.
They're definitely going to continue investing heavily in R&D
Right.
and keep working on improving their supply chain management and efficiency.
Mm-hmm.
They're also planning to make their retail model even better by dealing with underperforming stores
Right.
and finding those successful models that they can replicate and scale.
Mm-hmm.
And of course, they
Yeah.
can't forget about brand building and communication, as well as improving their overall organizational capabilities and risk management practices. So they've got a pretty comprehensive plan for the future.
But it hasn't all been smooth sailing, right? The report mentions a challenging operating environment.
Yeah, there are definitely some headwinds they're facing.
What kind of things are they dealing with?
Well, they've had increased expenses related to advertising, promotion sponsorships.
Which makes sense.
Yeah, it goes hand in hand with trying to attract those younger consumers and elevate that brand image.
Right.
And their fixed rental costs and amortization charges for those retail stores have also gone up.
Right. Because of those prime locations.
Exactly. Those high traffic areas come with a price tag.
Yeah.
And they've also had to make some provisions for asset impairment,
Hmm.
meaning they're dealing with some loss-making stores. So they're being proactive about managing those underperforming parts of the business.
Okay, so they're aware of those challenges and taking steps to address them.
Yeah, they're not ignoring the issues.
Now let's dig a little deeper into those key financial highlights. We talked about revenue and profit, but what else really jumps out from the report?
Well, their cash flow situation is definitely a positive.
Okay.
They had a strong net operating cash inflow of 4,688 million RMB in 2023, up from 3,914 million the year before.
So they're generating cash.
Exactly. And their cash reserves are healthy,
Okay.
totaling 17,976 million RMB at the end of 2023 in cash and various bank deposits.
So that gives them a nice cushion?
Yeah, it definitely gives them some flexibility to pursue those strategic initiatives
Mm-hmm.
and handle any potential economic bumps in the road.
Right. So strong cash flow, always a good sign.
For sure. Now, how about their inventory levels and receivables?
Okay, good question.
Well, the provision for inventories did increase a bit to 134.7 million RMB.
Okay.
They're saying it's because of the rising cost of their inventory. But they're keeping an eye on their overall inventory aging structure and say it's within a reasonable range.
Okay, so they're managing it.
Yeah, and on the receivable side, they actually saw a good decrease in their expected credit loss allowance. Oh, interesting.
Yeah, and they wrote off some uncollectible debts. So their focus is on optimizing that aging structure of their receivables
Okay.
to make sure they have a healthy turnover ratio.
Makes sense.
Yeah.
Now, the report also talks about some key performance indicators or key metrics,
Right.
like EBITDA, return on equity, and different turnover ratios.
Mhm.
What's the significance of those specific metrics? Why highlight them?
Well, it's interesting because they're using both GAAP,
Mm-hmm.
the generally accepted accounting principles,
Right.
and non-GAAP metrics.
Okay.
So those non-GAAP figures like EBITDA,
Mhm.
earnings before interest, taxes, depreciation, and amortization
Right.
give us a clearer picture of their operational profitability.
Okay.
Because they adjust for certain non-cash expenses and items that can sometimes skew the picture when you're just looking at net income.
So it's a different lens to view their performance through.
Exactly. Like their reported net profit margin was 11.5%,
Mhm.
but they also point out that excluding certain one-off gains, it was 11%.
Similarly, their return on equity was 13.1%, but without those gains, it was 12.5%.
Got it.
So by showing both they're being transparent about their underlying performance.
Yeah, giving investors a more complete picture.
Exactly. So while the main financials give you a general overview,
Yeah.
these additional metrics provide a deeper understanding of their efficiency and profitability.
Okay, that makes sense.
Yeah,
We also touched on how their expenses increased in areas like advertising and rent.
right.
What were the main reasons for those increases?
Well, like we said before, that higher advertising and promotion spending is directly tied to their strategy of boosting their brand appeal, especially among younger consumers.
Oh, you gotta stay relevant.
Exactly. And that jump in fixed rental costs and amortization of store fittings is all about securing those prime retail spots in those high-tier markets.
Yeah, prime locations, prime prices.
Exactly. And those provisions for asset impairment are a result of them taking action to address those underperforming stores.
Okay, so it's all part of their strategic plan.
Yeah, those moves have consequences, but they're necessary for long-term growth.
Now, what about their investments in things like infrastructure and capital expenditures?
They're putting a lot of money into key areas for their future.
Like what?
Well, one is a high-end intelligent manufacturing and flexible supply chain base,
Okay.
and the other is a new research and development and experience center.
So they're not cutting corners on those investments.
No, they're serious about it.
And how are they funding these projects?
They're using a mix of unutilized proceeds from a previous share placement
Okay.
and their own internally generated funds.
No.
They also acquired a property in Hong Kong for a pretty hefty sum, which they funded the same way. So these investments show they're committed to strengthening their operations, fostering innovation, and expanding their assets.
So now let's talk about how Li Ning plans to create value for you as a shareholder.
Okay, the important stuff.
Exactly. The report outlines their plans for dividends and share buybacks.
Right, so for the year ending December 31st, 2023, the board proposed a final dividend of 137 Hong Kong dollars per ordinary share.
Okay.
On top of that, they've been buying back shares throughout the year. They repurchased a total of 51,667,500 shares.
Yeah.
For a total of 1,053.8 million Hong Kong dollars.
Okay.
Or about 962.5 million RMB. Those repurchases happened in September, October, and December.
So share buybacks can sometimes signal that the company thinks their stock is undervalued, right? And it's a way to return capital to shareholders and potentially boost the stock price.
Exactly. They also mention a restricted share award scheme.
Right. What's that all about?
These schemes are typically used to incentivize and keep those key employees. In 2023, they paid 219.2 million Hong Kong dollars to a trustee to buy 5,554,000 shares from the open market for this scheme.
Oh, okay.
And they also have that 2014 share option scheme with 3,407,700 options still outstanding at the end of 2023.
Right.
So these equity-based compensation methods are designed to align employee interests with shareholder interests by giving them a stake in the company's performance.
So basically everyone wins.
Ideally, yes.
Okay, so taking everything into account, what's your overall assessment of Li Ning as we look ahead?
Well, there are a lot of positive signs.
Like what?
They've got consistent revenue growth, strong cash flow, healthy cash reserves, and they're prioritizing R&D and product innovation.
Right.
Their expansion strategy in core markets and emerging markets, and their focus on both online and offline channels shows a well-rounded approach to growth.
Yeah.
And their commitment to optimizing their supply chain and improving retail efficiency should also contribute positively to their future performance.
And we can't forget about those challenges.
No, definitely not. That challenging Op-8 environment they mentioned is a big factor. And those increasing expenses related to their growth strategy.
Right.
And the slight decrease in the return on equity, even after adjusting for those one-off gains, are things to keep an eye on. And their success in penetrating those lower-tier cities and expanding internationally is not guaranteed.
Going to take work.
Yeah, and they need to stay on top of those evolving consumer preferences and the competition.
Which is always changing.
Exactly. So it's a mix of good and challenging, but they seem to be moving in the right direction.
So what's your overall outlook for them based on this deep dive into their 2023 annual report?
Well, they're clearly emphasizing the China market.
Okay.
They're driving innovation, and they're committed to building a strong and healthy sports nation.
Those are strong pillars.
Yeah, they have a clear vision, and their goal to launch even better products and expand globally is ambitious.
Fueled by that anything is possible ethos.
Exactly.
Yeah.
But the key will be how they navigate the current economic climate and maintain profitability while continuing to invest. Their commitment to strong corporate governance should provide stability and accountability moving forward.
So for you, the listener, the big takeaways from our deep dive into Li Ning's 2023 performance are that they showed resilience and achieved growth in a tough market.
Yeah.
Their investments in product development and market expansion seem to be paying off. And they have a solid financial position backed by strong cash generation.
For sure.
But it's important to see how they manage their profitability as they keep investing and navigate those market dynamics.
Absolutely. Now, for those who want to dig even deeper, you might want to look into Li Ning's specific strategies in different market segments.
Okay.
Analyze the long-term impact of their R&D investments and examine their progress on those ESG initiatives.
Okay.
Environmental, social, and governance.
Right.
Those are usually detailed more in the full report.
Okay.
And comparing their performance and strategies with their competitors, both in China and internationally, can give you some really good context.
Yeah, that's always helpful. And finally, a thought-provoking question for you to ponder. Given Li Ning's focus on incorporating Chinese style into their designs and their efforts to appeal to younger consumers, How might those global geopolitical trends and changing cultural preferences influence their brand identity and growth in the years to come?
Hmm. That's a good one to think about.
Definitely something to chew on. Thanks for joining us for this deep dive.
Thanks, everyone.